In every field, history, politics, or finance, the wise always begin by studying the past. Why? Why look back to the past to survive the future? Back then, you were sitting alone in a small room, the glow from your computer screen casting a tired light on your face. Bitcoin had just dropped more than 30% in a few days. Altcoins were crashing even harder. Your entire portfolio was deep in the red. Friends around you started leaving the market. Some cursed, "I knew crypto was just a bubble." Others quietly disappeared, never mentioning investing again. Many still clung to hope. The market is too big now to crash like before. Or, this dip is a gift. It's time to go all in. And you started doubting yourself. You used to be confident. You believed this time would be different, that you were smarter than those who came before, that you'd know when to buy and exactly when to sell. But now, you realize you were no different. Every generation believes they are the exception. But the market doesn't care. It only follows one law. Those who don't understand history, or more precisely cycles, will become victims of it. That's right. It's not breaking news. It's not fancy technical analysis. It's history. In 1637, the Tulip Mania in the Netherlands. A single tulip bulb could be traded for the price of a house. Then it collapsed, taking wealth and confidence down with it. In 1929, the U.S. stock market crashed. Before that, prosperity reigned. Everyone was borrowing to speculate. When the bubble popped, it dragged the entire world into the Great Depression. In 2000, the dot-com bubble burst. Companies with no revenue but a dot-com name saw their stocks multiply. People believed the internet would change everything, and they were right. But timing matters. Even good ideas, if too early, become painful lessons. And then, crypto. In 2013, Bitcoin crossed $1,000 for the first time. Everyone called it digital gold, a financial revolution. Then, Mt. Gox collapsed. The market dropped over 80%. In 2017, Bitcoin soared again. ICOs exploded. Even unknown coins were traded like gold. And at the peak of the frenzy, the crash came. Again, more than 80% wiped out. Many never returned. In 2021, almost everyone believed BTC would hit $100,000. You saw how that turned out. Just a few months into 2022, came the FTX and Luna shocks. Trust shattered. And now, in 2025, there's one thing you must understand. You can't invest in the future if you don't understand the past. Because the market, at its core, is a psychological game. Every few years, it presents old traps to new faces. Sometimes through FOMO, sometimes through fear, sometimes through shiny new narratives, technologies, or promises. But the essence never changes. The cycle. It includes accumulation, growth, euphoria, collapse, and again, accumulation. Just like humans go through birth, aging, illness, death. Just like the universe flows through day, night, seasons, years. Believe in the future. But never underestimate the past, because deep down, we're all just reliving what's already happened. The only difference is, this time, it's happening to you. The cycle, the market's endless game with human psychology. Imagine the market as a giant spinning wheel. No one stays at the top forever. No one stays at the bottom forever. Each person, each generation goes through a turn. The only difference is, those who understand the cycle survive. Those who don't get crushed. This wheel always moves through 4 familiar stages. Accumulation, the stage of forgetting. At this point, the market is eerily quiet. News is sparse. Social media barely mentions crypto. Friends have completely written off investing. Many delete their trading apps and walk away. Prices move slowly, barely a few percent each week. This is the phase where the market is forgotten. But precisely during this time, smart investors are quietly accumulating. They don't need to know if the price will rise or fall tomorrow. They only understand this. This is the price range where no one wants to buy, but history shows this is exactly the best time to buy. Example: after the 2018 crash, Bitcoin hovered around $3,000, $5,000. Mentioning BTC back then drew laughter, but those prices laid the foundation for the run to $60,000 3 years later. Growth. When belief returns. The market begins to move. A few positive headlines appear. Prices rise slowly but steadily. The bold investors start seeing profits. Media reports, Bitcoin recovers from the bottom. Altcoin XYZ up 80% this month. Confidence starts returning. Some old investors re-enter. Newcomers grow curious. You start seeing profit screenshots on social media again. But overall, most still doubt. Is this a real rally or just a bull trap? This is the setup phase. Not the peak, but the foundation for the peak. In 2020, post-COVID, Bitcoin climbed from $6,000 to $10,000, then $15,000. Many thought, it's rising too fast, must be a bubble. But that was just the beginning. Euphoria, when everyone's a genius. Now the market soars. Prices rise daily. Every coin seems to have a wave. New investors FOMO in. Veterans sell early, then regret and buy back in. Media calls it a financial revolution. TV, TikTok, Facebook overflow with crypto content. Learn to earn from crypto classes pop up everywhere. Everyone becomes an expert. I quit my job to trade full-time. This time is different. Bitcoin to 1 million. Confidence peaks, and that's exactly when the market prepares to crush the dreamers. At the 2021 peak, Bitcoin hit $69,000. NFTs exploded. Elon Musk tweeted, "Dogecoin soared. Even worthless coins saw 10x gains." At this point, everyone believed they were smarter than the market. But in the background, a silent phase had already begun. Distribution. Distribution, when the whales quietly cash out. During euphoria, when everyone believes prices will keep climbing, when even the skeptics join in, when the crowd chants $1 million targets, 10x gains, life-changing wealth, that's when distribution begins. It's quiet, not loud, like most expect. Prices stop climbing sharply. They start ranging at the top. Trading volume spikes, but prices don't break higher. Small pumps and small dumps repeat again and again. On the surface, it looks like the market is resting before the next leg up. But in reality, the whales, those who bought cheap, are gradually selling to the FOMOing crowd at the top. Distribution isn't a violent dump. It's a careful, calculated unloading, so the masses don't realize what's happening. The psychology at this stage? Profitable traders say, "I'll just wait for one more push." Those slightly down believe, "It'll bounce back to the top." Newcomers rush in, thinking, "I don't want to miss this wave." Everyone thinks they still have time, but no one sees the door slowly closing. In November 2021, Bitcoin peaked at $69,000. For 2 months after, it hovered between $60,000 to $68,000. Many thought it was just resting before the run to 100K. In reality, it was distribution. Soon after, the market plunged. Bitcoin crashed to $15,000 within months. How to spot distribution. It's true. Distribution is hard to see with the naked eye because it targets greed. But if you understand cycles, you'll notice the signs. Price makes new highs, but volume doesn't follow. Good news floods the media, but price doesn't react. People who once said, I'll hold for years, start bragging about profits. Everyone tells you, don't sell, this is just the beginning. All of it. The final noise before the party ends. Distribution is the wise person's test. Many believe, just hold long enough and I'll win. But they forget, not everything holds value forever. Even diamonds lose value if you buy at the top and sell after a crash. Markets don't reward blind patience. They reward those who know when to move and when to stand still. Collapse, when the truth hits. One day, you open your app, and your portfolio is down 20%. The next day, another 30% gone. Bad news piles in. A major project goes bankrupt. An exchange freezes withdrawals. People panic sell. The market's rigged. Crypto is a scam. I'm never coming back. This phase hurts. Not just financially, but emotionally. You lose confidence. You lose the image you had of yourself, and the truth becomes clear. I'm not different from those before me. I just repeated the cycle with a new face. In 2022, FTX collapsed. One of the largest exchanges vanished in days. Millions lost everything. Bitcoin dropped from $69,000 to $15,000. Many deleted their apps and never returned. But when the dust settles, a new cycle begins. The market goes quiet again. A new accumulation begins. No one's talking about it anymore. Only the survivors remain. And strangely enough, just when it feels like everything is dead, a new cycle starts to form. Understanding. Cycles is everything. If you don't know where you are in the cycle, you'll sell the bottom in panic, buy the top in euphoria. But if you do understand the cycle, you'll act opposite the crowd. Buy when others are running away. Accumulate when others mock. Take profits when everyone is celebrating. The richest aren't those who master technical analysis. They're the ones who understand crowd psychology and go against it. The cycle doesn't teach you to get rich fast. It teaches you how to survive. Be cautious, be patient, and remember, the market always comes back. The question is, will you still be here to meet it? If you're here, listening to this, you might be in the doubt phase. You look at the market and wonder whether to stay or quit. You look at your portfolio and wonder if you've made the wrong choices. You look at the future and all you see is fog. But remember, the best time to invest is always when everyone else gives up. 2028, 2029, a leap not for everyone. I believe, like many others, that the years 2028-2029 will mark a historic turning point in crypto, not just in price, but in convergence, AI, blockchain, decentralized finance, clear regulations, and a new generation of investors, wiser, stronger. But to reach that, you must survive. You must get through the fake crashes, the brutal shakeouts, the perfect traps set by market makers to wipe you out. Some days you'll feel smart, other days you'll feel incredibly stupid. Some nights you'll stare at charts till morning, other days you'll want to delete every investing app you own. And when you feel you can't take it anymore, remember, those before you felt the same. The only way to not fall is to know where you are in the cycle. You don't have to guess the top or the bottom. You just need to know, is this time to accumulate or time to take profit? Is this planting season or harvest season? And you'll only know that if you've read the book of past cycles. The market doesn't change. Only the players do. The emotions you feel, doubt, fear, euphoria, regret, millions before you have felt the same. They left behind lessons, not for you to admire, but for you not to repeat their mistakes. Learn from history, not to live in the past, but to survive the future.